Hello everybody, Brian here from quantlabs.net. Today is February 28th, 9:19 a.m. Eastern Standard Time. I wanted to talk about where we're at with overall crypto market, or the mainstream markets. Right now, I'll be doing a event tonight on this about how war affects your portfolio. That's tonight at 7 p.m. Eastern Standard Time. So if you're interested in any of this stuff, please join us. Join the newsletter, get the announcements of all our webinars and topics at quantlabs.net/contact as well. Right there. And again, the webinar is this right now. So we know about the situation in Ukraine. As you can see here, the impacts have been fairly negative with the futures market. Oil is up quite a bit. Gold is up as well. And the VIX historically is not as high as it should be. So again, you don't know what you can trust in the markets. And then you also have the Forex down and the cryptos mixed as well between the Bitcoin and the altcoins. And the overnight trading wasn't that great for the FTSE. A little positive going on there in Japan. All right, so let me show you the new latest tear sheet here. So this, you could see here, the benchmark in yellow, S&P 500 or SPY, not very strong, but we found a new combination for January, February, really strong. As well, it's over 20% up for the year versus 14.76 over the last year for the benchmark. Here, what we're looking at is the overall benchmark for the year 2021. This combination still outpaces it quite a bit. So for this year in 2022, you can see the benchmark was negative. Meanwhile, this one trading basket just blew the doors off it, over 60% return over the last few months. So this is probably one of the better performing coins. This is the sort of thing we'll be talking about to go defensive. Now, these are uncorrelated, does not include gold. There's no equity whatsoever in this basket. And here's the monthly returns. Very strong returns for January at 66%. Pretty strong for December, and not so strong for February, but there's better baskets that would give you much higher return for February as we go into March. So what I could do is start to look at the different combinations to say, okay, let's calibrate to this trading basket and allocate more capital to the better performing basket that has better outlook and better guidance for March for better performance. And you can tell that this basket would have been great for December and leading into January as well for maximum return. So there's that to keep into consideration. So the U.S. indices, or anything U.S. is unrelated, because as I said, the challenge here, VIX should be, considering when you have Putin threatening, was actually elevated his nuclear alertness. You would think that would put the VIX much higher than what it is right now. In the peak of the pandemic, it was over 40, and now we're only at 30, right? So historically, this should be much, much higher. Let me just pull it up here. So the VIX, it just lags. Okay, so if I was to show you the max, let's do a full screen here. So looking at the VIX, you would think that the VIX, which is the volatility index, you could see it's building, but look how high it was back in just April as it came off. We were over 60, and look at where we're at right now. We're only at 30. So in February, when things started to take off, they took off very quickly. But things could easily quickly escalate with this. But again, it's not a really strong forward indicator. Another thing I will say here in these tear sheets, all the ones I've been generating for the last, let's say, month, not one is generating from U.S. bonds. Nobody here. This is the thing you will not get in the 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 real in mainstream media like Bloomberg or CNBC. Um, you have this website, Real Time Debt Clock. Let's see, the National Debt Clock. And nobody talks about this, very little, except the odd Republican politician. They're not talking about things like national debt at being over $30 trillion. Nobody's talking about you have a population of 332 and only 125 people are working and are actual taxpayers. So 1/3 of the country is paying for 2/3 of the country and basically leeching off of what's available from the government. Thing is that this heavily impacts the U.S. dollar, heavily impacts any U.S. asset that the world does not want to hold, because it's like kind of like toxic debt, or it's very strongly leaning towards it. Everything else is toxic, but right now the U.S. is not the best. Does not have the best outlook, and because of that, nobody wants to hold it. The U.S. dollar is not as strong as you think it would be. U.S. Treasury is not as strong as you think it should be, and that's why you're seeing the returns and the baskets that I'm getting. I put up an article on the newer quant-labs.net about the wealthy are wanting to hold low volatile currencies like the yen, and that's all they want to hold because it performs in a very stable, predictable manner, as opposed to gold, which can be proven to be very volatile in price. And as I said, gold is not part of my outlook. So if you look at, let's say, gold here, you can see how volatile the price is, or it's not performing. That's a monthly view. But if you look at the hourly or daily view, you can see here that these down days really can affect the performance versus, I don't know, something else as well. And there's better assets, not just what you think, and there's currencies as well, and they cannot be related to each other. So that's why we're able to get this kind of performance. Again, I'll be talking about that more tonight, but very important to understand that. Other than that, that's about it. We shall talk to you later. Again, if you're interested in this sort of thing, and it's pretty important to be able to get high-performing returns. A lot of people probably aren't, or their financial advisors are not. Go to the quantlabs.net/contact to sign up, to get on my newsletter. All that info is kept privately. I don't sell it or release it to anybody. As well as that gives you announcements of when I'll be doing these webinars. So important stuff. All right, we'll leave it at that. Thanks for watching.